What's up, traders? Anthony Grudelli here, and thank you for tuning in to the Futures Radio Show podcast. Welcome to today's panel on how to use zero DTE options to day trade futures. On today's panel, we have Matt Coward. Matt is the founder and CEO of Rocket Scooter Trading Platform, a YouTuber and a trader since 2010. In his former career, he was a chemical engineer. He trades futures, and his trading style is based around positional risk analysis and gamma exposure mechanics. We also have Ashton Nolan. Ashton has been trading since 2015 and has ranged from day trading stock to swing trading and now to both option buying and selling. Ashton has also mentored hundreds of traders in the past few years, and Ashton is also part of the Rocket Scooter team. Today's podcast is sponsored by EdgeClear. Futures Radio Show listeners can now trade EdgeClear for a low introductory rate of 59 cents for most futures products and 20 cents for micro products and even event contracts. Fund with as little as $100 and pair this with Sierra Chart's Teton order routing to receive one of the lowest all-in fees in the industry. For new EdgeClear members only. You can check this out at edgeclear.com/deli. Also go to edgeclear.com/deli because every single month we do giveaways. Morad and I are on here every month. Morad is not here this week. We have Ian here, who is awesome. And in the middle of today's show, we will do a giveaway for this week, and we're going to be giving away a pair of Bose headsets. So if you're listening to this show, remember at the last Wednesday of every month, as Morad and I, or whomever it is, comes from EdgeClear, we're always doing a giveaways. And make sure you go to edgeclear.com/deli. And you can learn all about all of that stuff. Now, I wanted to bring in the guys. Let's bring in Ashton, and we're going to bring in Matt. What's up, guys? How are you?
Great, Anthony. How are you?
I'm doing great, man. I just got back from Vegas. I'm shaking off all the cobwebs, man. I got in late last night, had a little cocktail, a little dinner, got up, feel refreshed, back on East Coast time. I'm ready to roll, man.
Nice. Vegas is always a good time.
Oh yeah, it was hopping, man. It was crazy busy. I stayed at the Aria. I was out there for the money show. I got to meet a lot of people out there that either follow the podcast, just people in the industry. So it's pretty cool. Great to see you guys too, Ashton. How you doing, my friend?
I'm doing well. I think I'm doing a little bit better than both of you guys, man. I know you're recovering from a nice weekend. I honestly, I might be the only adult in the U.S. over the age of 30 who has never been to Vegas.
Oh man, dude, you got to go. It's great.
I know. I've been dangling that bait out there for my wife for years. It's just like, we're not really a big part. I used to be, for sure, but marriage will settle you down a little bit. But I was like, we can just go out there and because there's some great restaurants out there that I've heard, and they have some great shows. Just like, if anything, we'll just go out there, try it out for 2 days, and come back.
It's definitely worth going. There's so much stuff to do, and really just had a blast. And let's bring you guys in today a little bit. You guys are obviously first time to the show, and I also want to mention to everybody. Obviously, we're talking about zero DTE options today, and you guys have created something with Rocket Scooter, which we're going to see and talk about today. And I know that you guys are even going to be working with Morad and EdgeClear a little bit about that. We'll maybe let Ian and you guys discuss how that would look throughout today's show. Because it's such an interesting time, I think, for futures traders with these zero DTE options, because really I know a bunch of traders now that are really almost solely looking at this as their number one indicator, which I find to be so interesting, and it's not something that's new, right? I mean, 0 days to expiration, I guess, is somewhat new to having futures with 0 days to expiration options. But the SPY, I think, has had it for some time. I don't know for how long it's been, but it's not something that's really new. But it seems like it's this new tool that everyone's looking at, whether it's flow or GEX data and all these different things to find out what the market is going to do for the day. And so I think we start off with today. Matt, you're CEO and founder of Rocket Scooter. Talk to us a little bit about your background. Maybe give us that brief little background of yourself, and then how you got to the point of creating indicators or things, through Rocket Scooter to help traders out.
Yeah, that's a sorry, I'm kind of muscling through a cold right now. Excuse me. Yeah, so you're actually right. The there's always been 0 day to expiration options, just, and Rocket Scooter, as we build our tools out, I'll kind of tell you like where we came from and why we wanted to build, as the 0 day to DTE options become more popular is what's happening. You have to have trading tools or platforms that are able to adapt and come up with things that can adapt to the new paradigm shifts as traders kind of change their appetite as the years go by. And so, myself being an engineer, I got into trading, like I said, 2010 and in the last recession, how, during COVID, a lot of folks, maybe viewers here, got into trading during that, markets crash out, people get into trading. I was kind of like the last batch of traders. So in the last recession, I kind of got interested in markets, even in my last job as an engineer. And so when I got into trading, all the tools that were available there just seemed like they were static and really couldn't evolve as things were changing. And even some of the stuff I started looking at originally, technical analysis and some of the original tools, they just didn't seem to pan out. As an engineer, my appetite for, correctness and data just wasn't there. And they were very weak tools to begin with. And I started reading about how modern markets work and electronic exchanges work. And there was a lot of information that just didn't seem to be captured in your traditional moving averages, right? And so I just researched a lot and tried to figure out how markets worked. And then, as the years went by, I started creating my own tools that were exploiting mechanical parts of the market. And that was a little bit different, a little more actually repeatable when it came to, coming up with trade ideas around an example. Anytime you get shutdowns, anytime the limit downs are hit, the markets all shut down. And so there's a consistent rule. There's a lot of consistent rules like that take place. A lot of people didn't know about. And so I just kept digging and reading, and I read every single thing the CME group ever put out. I mean, I read everything, and it just was, there's a wealth of information out there that allowed a modern developer like us to come up with information, to come up with newer modern trading tools that weren't just traditional price action mechanics. And so as things like 0 DTE options come to fruition as being a popular thing that everyone's trading, we're able to adapt because we're built to look at the effects of how the back end of markets respond to these things. And so Rocket Scooter was birthed out of that kind of journey. I created tools. We had a little geek club. Friends, kind of discovered us, and who discovered us early on would join our group. They would want to learn kind of what we learned. We'd share knowledge with them. They'd share knowledge with us. Then we started sharing tools with each other through spreadsheets and other things. And then we just became so big through word of mouth that we created an app for us to share our tools with each other. And then the app evolved into creating a platform to share the tools with everybody. So it was a cool evolutionary process. It just came from a group of people, and there's 3 of us. We were all engineers, and we just wanted to create something cooler and better for the modern trader. And as we've evolved, Rocket Scooter is just a platform that integrates so many new things that traders haven't been exposed to before. And Ashton's probably going to talk a little bit about that in his part of it. So,
well, that's awesome, Matt. Look, at this industry is always about evolving and adapting. It's always about finding more better tools, more efficient tools to potentially participate in the markets. I know that there's things I'm using now that I didn't use 20-something years ago when I started, and it's just one of those things where you have to be open to see what's working, right? I mean, I've said this so many times, and I know some people will disagree with me, but I feel like everything works sometimes, nothing works all the time. The strategy that I originally created, I still use to this day, but there's nuance to it, right? Like sometimes I look at the market, I scratch my head, I see something exactly the way I thought the day would pan out. Like I thought today would be a trend down day. And I was short earlier and I trailed stops. I put a tweet out, even people were commenting about it. I said, no matter where you put your stop, they're going to find it. It was just like a day where I just, like it came all the way back. I didn't expect it. And then some of my friends in the were pinging me and saying, well, look at the quant stats today. They said to buy it, and then, the options flow shifted. And you're just like, wow, man, that may not be something that's part of my strategy, but that could have been a tool that I could use for confirmation to help me be a better executor of my strategy. And I think maybe we go to you, Ashton, and we talk about that a little bit. You've mentored traders. A little newer to the game than Matt and maybe myself, but it's like I love that fresh perspective. Like you come into the market now, and I think that a lot of times you can learn so much from traders that maybe haven't been in the game as long as I have, or maybe Matt, but you see what's happening and you're saying, look at, man, you don't come in with that old bias of like what the markets used to be like. You come in with a fresh perspective. And so from your perspective, talk to us a little bit about yourself and your journey, and how and why you think that using 0 DTE and Rocket Scooter help you become a better trader.
So I started trading back in 2015, and even in the past 8 years, I'll even actually go further than that. I'll say even the past 2 years, the market has changed exponentially. One of the biggest culprits of that is the institution of the 0-day options for the SPY, the QQQ. That's been an evolution in and of itself, because the SPY and the Qs first started at Monday, Wednesday, Friday, and then they started throwing in 0-day options. IWM, which is the Russell, they're still at Monday, Wednesday, Friday. So it's only a matter of time before the Russell gets the 0-day options. So in a nutshell, what this is telling me, the market is getting more efficient. The market is getting faster. So even since I started trading in 2015, your moving average indicators, your MACDs, your RSIs, the underlying formula for these indicators have not changed at all. Now, there's a time and a place, in my opinion, to use those. But what I have seen, especially since the pandemic, because the pandemic brought a flood of new aspiring traders into the market, a lot of which have left since then. But what I have found is that they're using indicators and tools that were designed for a 2002 market, 2008 market, and they're trying to use those and adopt those into today's market. And it's like I'm trying to mix vinegar and oil together. It just doesn't work, especially if you're trying to use certain tools for options trading, as an example. So, and what I tell people that I'm mentoring is, like, if you're trading options, especially 0-day options, you have got to have the right combination of tools, and you have to be right now, because that theta decay hits so hard in these contracts. And actually, our friends at Tasty Trade, they did an interesting study on this, that the theta decay within the first hour and a half of the market decays 30% of those contracts, give or take, in the first hour and a half. That is just insanely fast. So if you're looking to buy calls on 0-day options, you have to be right now. And if you don't have the right tools to accommodate a borderline perfect entry, your trade might be toast, and might be toast in a hurry. So Matt approached me. It's funny how we collaborate and network and get to know new people through social media through all its pros and cons. Some of the pros is meeting awesome people that you would never met otherwise. Matt approached me about a year ago, give or take, and he's like, we were collaborating on some Twitter Spaces, and the terminology him and I were both using, we're like, wait a minute, he's referring to the VIX? Like, oh, I like this guy and how he uses it and how I use it and all those things. And he's like, hey, we're building something over here, and we want you to be part of it. So I want you to take a look, tell me what you think. So I started digging into it. I'm just like, yeah, we need to get this into the hands of retail traders like yesterday. Especially when people started trading these 0-day options. The rise in the popularity of this of 0-day options is just exploding, and it's probably going to continue to do so. So in steps Rocket Scooter. It kind of pulls back the veil of the other side of the market that most retail, if not the vast majority of retail traders, are not seeing or don't even know about. That's what Rocket Scooter does, and it can certainly help both futures traders, options traders, even stock traders. So it's style or instrument agnostic, I guess.
So yeah, I'll even add something to that. I exclusively trade mostly futures, and as we see, when Ashton and I did meet, we almost were completing each other's sentences. We were on a space with the street, and it was just hearing this guy, talk about all the things. I knew I was building something really substantial, and I need an options guy. And so, Ashton just was the person to, when I brought this, I remember when I brought the tool to you, I was like, we're building something secret. Nobody's done anything like this before. I want you to see it. And I remember I showed it to you. And I remember at the end of the conversation, you were like, I want to be a part of this. This is big. And then, and it was kind of cool. So, just how we just kind of met and kind of worked together. What we've made is pretty cool. And 0-day DD options, we know, is a thing that it forces a lot of hands. It forces a lot of trades. It's last minute hedging. It's last minute cheap hedging. There's a lot of interesting mechanics that have come out from that being popular. The reason, these options keep getting introduced is strictly because of money. There's so much money lost to the market on a daily basis, these zero DTE. I think I read something that the net notional value of SPX options is tied up in zero DTE just for SPX alone. That's ridiculous. And it means that people can take more risk on the table and have less money in their pockets and hedge at the last minute at the right time if they need to. Or you can squeeze somebody out by just brute forcing some in the money puts and then force somebody. If you go out there and buy some in the money puts, then somebody has to go out there and be able to, you have the puts, you can sell them. So they need to be able to buy from you. So you have to short, you can force someone to short at the end of the day just by brute forcing the market. So the idea that has all these new mechanics, it's just interesting to see. And I think it was last, October, November when SPY and QQQ ended up getting Monday through Friday daily expiring weekly options. So it's a new thing. And the only reason to do it is the same reason Monday, Wednesday, Friday came out, as opposed to just being Fridays. It's money. Make a lot of money, a lot of commissions. These things just became very popular. And since you don't need a lot of money to trade them or have to type a lot of money to hedge with them, it's a very popular option as you can press more of your portfolio into the actual risk position you have to keep a little bit, just to jump in last minute on some very cheap hedging right at the last minute. And even the short-term hedging, because as Ashton said, the majority of that theta decay being knocked out the first part of the day, you don't take that hit and then you need to hedge in the last 2 hours of an expiring day. It doesn't take a lot of capital. So you don't have to have free cash sitting around, because free cash sitting around is a terrible thing to have in an inflationary environment. Cash loses money every single moment it's not exposed to some kind of risk just due to inflation. So the inflation-driven environment has driven a lot of institutional traders to that front-end risk, because you don't have to have a lot of free cash sitting around to trade them. So it's neat to see that paradigm shift.
A couple things I want to talk about, because we're going to go right to the Rocket Scooter platform and we're going to look at some tools that traders can use, because that's what we're all here for, right? Everybody, I'm somebody who's new to using zero DTE. I'm looking at some GEX flow and things like that. And I was actually talking with the 2-year flipper, a guy I've known who's been a scalper like myself for many, many years. And we're like kind of trying to find our way with it. Like, how does it really fit in? I guess I'm kind of an old school guy, but I do totally embrace the new type of tools that if they're working, they're working. And I've seen it. I've seen how this zero DTE data has really impacted the futures markets, especially in specific moments where I would look at a day where maybe nothing I would think would potentially happen, and all of a sudden I see some stuff happening in the zero DTEs, and it just totally immediately comes into the futures market. And like I said from the beginning, I think that it's a great, even if it's not going to be your sole indicator, and we'll see what you guys have, I think it's something that you just almost have to be watching right now because of all the things that you guys discussed. And one thing I want to say, Ashton mentioned that some of these old school things, or maybe moving averages or certain things, don't necessarily have they're not maybe as, I don't know if maybe you said efficient, or maybe tools that just are not as working as well maybe these days, and there's like always a time and place for them. It goes back to like the older things, some of these really tools, it's always about the situation, right? And that's why I think when it comes into like in these markets right now, I think zero DTE as a longtime futures trader, they're basically futures. That's what a lot of times I look at them. I'm like you said, Matt and Ashton, like that theta, and I've traded zero DTEs in the E-mini S&P. I've traded them in the micros. I've traded them in the SPY. And if you're not right away, even if you are right, you can be wrong. It's a very difficult market. Like there's a certain time where I think if I really like the market, I'm going to use a zero DTE because that's where I'm going to get paid the most at that specific moment. Nothing else is going to pay you more at that moment. And there's other times where you look at the futures, and that's the better play because maybe you think it's going to go because of what the zero DTEs are, and maybe you don't use them. You just use a tool from there, but use a different instrument to get in. And there is this game is being played day in, day out, and people can say all they want about if this is retail traders coming into this because maybe, like you said, man, it's less expensive. I know a lot of big guys playing zero DTEs every day, and we're not talking about little guys. We're talking about real big guys, and so it's here. So I think that let's take a look at what you guys have. I'm going to pull this up because I want to get into the nitty gritty here. A couple of things I want to say to everybody that's watching. First off, I put a poll out there. Do you watch zero DTE options to help you in your trading? Please vote. And so far we have 72% say no, 28% say yes. So we have an audience here, guys, that's 2/3 of it is not using this, right? And so I think this is obviously a great show to showcase to them how they can start to use it. And everybody, put your comments in the chat. It's important to hear you guys throughout the conversation, because if 70% now of you are not using it, let's get involved and let's see how these types of tools can help us, because like I'm here to learn as well. So I don't know which one of you guys wants to take the helm first. I think, first of all, tell us what we're looking at here on the platform. And then are we looking at live stuff for today or these previous examples? Let's talk about that.
This is live, Anthony. So this is live, the platform as it is. To go through just a little history of that, people talking about 0-day DTE options or any kind of short-term options. If you've noticed lately in the last 5 years or so, options flow has become a popular hot topic. Most technologies are addressing this because they realize that options are one of the first places where, for instance, if you're using, let's go back a little bit, if you're using technical analysis, an example, moving averages or a MACD, it's looking at past price history to try to forecast future pivots. So looking in the past, try to forecast the future. As technology providers are becoming, or data feeds have become more available and more widely available to, developers like us, you realize that when I buy an option, if I buy S&P 410 calls for this Friday, I've told the market that I want to buy 100 shares for every call at that price for this Friday. I'm actually showing my hand for the future. And so when you look at options, without going too deep into them, it's telling you where people want to have risk in the future in general, whether it's a week out or even tomorrow or today by the end of the day. So the newer technology providers have started taking options data and creating newer ways to see it. And I would say that it just on the surface, all the competitors to Rocket Scooter do kind of like options flow and real-time options flow. And our goal, it's like look for unusual activity and unusual order flow and unusual activity in the 0 DTE, especially create like last minute moves. We wanted to create a system that can even forecast when unusual activity would be to even one up the one up. And so we've created tools that analyze options. And in a nutshell, what we do is, and what most people will look at is the entire spectrum of options. What we do is we have an algorithm that can determine through the options flow what it believes is a zero risk held, delta hedged option held by a market maker. We have mathematical determination of which options in the flow belong to dealers and which options belong to speculators. And when you separate the dealers from the speculators, you can create a really neat split in the market. I just have SPY on my screen, if you can see right here. And as you see, there's a bull zone and a bear zone. It is discrete. It is cut and dry. There is no choppiness. We've taken all the options data, which if you normally see how people utilize this, it'll be like almost like a choppy histogram of where hot spots are. But we've created the hot spot. It's one thing, and it's looking for where SPY is bearish or where SPY is bullish relative to the options landscape. So we take all that options data, we compile it, extract what we believe the dealer options are, and then we draw on the chart automated for any stock or any ticker where the real bull side and real bear side is. So an example is SPY on this on the chart. Today's activity, SPY is certainly bearish. And I know Anthony said today he was shorting. Actually, today I was longing, and I did long, and I bought the dip here in Rocket Scooter. And so the idea is you get a real visibility of what's going on in the market, especially with that risk that we've been talking about of these shorter term options. We pick it up every morning and put the calculations on the chart. So finding like where stocks are really bullish or really bearish helps you identify an example of the stock is just selling off while still being bullish or actually turning from bullish to bearish. And bears obviously are people that are openly short in the market when they have like an illiquid position against the bulls. And so the market makers take the other side, and the bulls are when there's people long in the market with no active trading shorts, and market makers on the other side as well. And find a clean split between the two. And every stock has this clean split. You can type in any ticker and you'll see the same thing, like Apple, an example, or futures. You'll see that there's pretty much a clean split of where bulls and bears disagree. So we find where markets are liquid and illiquid very nicely. And we can show where unusual order flow activity would be. And I just randomly typed in Apple. But as you see on my screen, what the neat thing about it is if you can identify where those options are, We have another way to look at the maximum gamma exposure of just what we believe are market makers. So that's also different than what's out there with the gamma exposure. We call them hedge pressures. And hedge pressure is a predictable high volume pivot that, as you see on Apple, there's just this tiny little volume spike that comes out of nowhere when you touch this blue line. It's written there at the beginning of the day. So I'm looking to trade. I know where actionable pivots can be just by looking at the options. And so all that 0 DTE risk, or 1 week out or 1 day out or 3 days out, whatever, is all piled up into these numbers. And we can see where that actual forced hand trading will be. So right here is example. There's forcing a lot of change in order flow. You see unusual activity pops up here, and we forecasted it from the start of the day, which is kind of neat, because when you're trading, you want to plan your trade out. It's great to have a plan that you start out the beginning of the day with, which is nice. Ashton, you have any commentary on that part?
I have a comment on just using this overall structure here, just specifically for 0-day options. So what I trade 0-day options, but usually whenever I do it, I'm usually a net seller. Going back to our previous point earlier about how fast theta decay decays in these contracts, within the first hour, they decay roughly between 20 and 30%, depending on what the volatility is looking like for that day. And then the last hour and a half alone decays about 40-some% of those contracts. So against the moment you put on a position, if you buy a call, buy a put, whatever, you're immediately, the clock starts. But if you're a net seller and you're selling for premium, I usually do it in the form of selling credit spreads. So that way that theta decay is working in my favor. And normally, whenever I trade these, I'm looking at these levels at all times. I look at them for entries, obviously, but also whenever I'm managing the trade. So to Matt's point, futures, you don't really have to worry about the theta decay as much. So, you buy at an entry and then the contracts either go up or down. But if I see an entry here and I sell, okay, well, one, that accounts for whether or not I'm going to be winning or losing on that trade, obviously, but also it helps me format my trade according to my risk. So for those of you who know or are aware of options trading and options selling, if I sell a very, very far out of the money call or put or whatever, and I do a spread, well, my risk to reward is going to look terrible. So, but my probability when that trade goes up. But if I'm looking at something in Rocket Scooter, so for example, hedge pressure or half gap, the half gap is that white dashed line there. Or at the edge of a bear zone or a bull zone, whatever the case is. And I feel like that's going to be a pivot for the market, for the SPY, or I trade the SPX personally. I can use that to my advantage and say, okay, I don't need to go all the way out of the money on these contracts. I can go closer to at the money. Risk to reward is much better that way. And we all know that the closer to at the money you go in these contracts, well, we already know 0-day, the theta decay is burning very quickly. But if we go at the money, they're burning even faster. So there's a lot of ways that I use this personally. And there's a lot. The more information that we have, the better. But too much information can be overload. So right here,
I 100% agree with that.
Yeah.
One thing that's neat about kind of what we do, each of our tools is an exploit of something that is mechanical in the market. You might see a little box called Redistribution Zone. This is where, ES futures, you can see overnight where we trade up or down, and we gap down in the morning when the equities market opens. Like I'm looking at QQQ when I trade NASDAQ futures, for instance, because the equities market has a really neat mechanic in that these ETFs are hedged in the shares of the ETF, and people that buy the shares buy the options. The options are hedged back on the shares. So it creates like a closed loop, which makes it very easy to find pivots in the NASDAQ futures or S&P futures or any of the futures by looking at the corresponding ETF. So one of the tricks that I trade futures by looking at this, you can predict gamma squeezes. You can predict when people are in margin calls. I'll give you a really cool example, like on the chart. If everybody knows when you trade, I'm just going to draw like this J-shaped thing. This is the 9:30 open and the 4 o'clock close of the stock market. And this is what a volume chart looks like. It's typically High volume at the start, it decays, and after lunchtime, it starts to pick up around 2 Eastern. And what you'll notice is that when you start interacting with hedge pressure, which is a gamma exposure level, so somebody said that they use GEX or GEX to look at where a sense of where price is going towards, which is really cool because what GEX does, it looks at all options, right? All open interest across the board. And what we do that's a one-up of that is we throw out, you're going to see that your results with just regular GX are going to be skewed because of out of the money options. They may have high open interest. Somebody can go out there and buy 50,000 YOLO 350 QQQ calls all of a sudden, and then your balance points are all over the place. So you might get like 3 or 4 balance points. What we do is when you identify, it's like GX of just market makers. We mathematically determine, because we know how they behave, you only get 1 interest point, which is that split in the bull and bear zone. So you guys, somebody asked about it. It's a great tool to use. When you do what we do with it, it's even better. So we've kind of got a neat way of approaching gamma exposure. So an example is when gamma is the first derivative of delta, which is the first derivative of the change of price of option with a change in the price of the underlying. So delta is amount of order flow change that's hedged. So there you go. If there's an unusual hedging, then there's going to be unusual order flow. Gamma is the change of delta. So any kind of delta hedging strategy that a market maker will have is very sensitive to changes in gamma because it requires you to forecast an acceleration of how much order flow you'll need to provide if that gamma is showing that delta is changing relative to price. So the long-winded answer of what that means mechanically is that whenever you are gamma negative on these weekly options, which is what the blue line is, and there's enough order flow or enough change in market sentiment to press to the other side where you have gamma negative to gamma positive, which is what we have, you'll see that this beautiful J-shaped volume curve, right, starts to get a little funky and weird from that point forward. You guys, there's spikes, there's spikes, there's spikes, there's spikes. This is actually identifying where margin calls can be, or forced hand hedging, which causes short market makers to flip and go long. You don't normally see random volume spikes for no reason at noon, at 11. So the idea that you have this volume curve that just starts out of control and spiky is unusual. And again, we forecasted where unusual behavior would be from the start of the day. All these numbers are printed at the start of the day. And so there's a very clear characteristic flip of the sentiment of the market. And a lot of times those are driven by those shorter term options. It's forcing people to buy. So neat thing about it is that you can just see that the market kind of spirals out of control the minute you start going on the other side of that line. So this is one of the most important pivots of the day. And I'm going to base my decision on just seeing where that automated portion of hedging pushes the market. So without any catalyst or reason for people to jump in and buy or sell something, the market just finds a natural balance point where people are neutral, people are hedged, and people are assigned the positions they want to be in. So hedge pressure is like the modern one-up of the GEX. So it's kind of a new technology. We have a monthly hedge pressure that does the same thing for monthly options only. And this is for weekly options. And so when I'm trading futures, for instance, I actually longed the SPY and I closed out right here when QQQ hit a pivot point. So my long was basically there today using these techniques that we have here. But some other cool stuff that we have like a gap fill predictor. There's another thing that tries to predict if the gap's going to fill based on arbitrage. We have a thing that predicts if the SPY or the S&P futures are going to go to a bull zone, if they're in a bear zone. A lot of neat tools, and on the surface, it's not a lot to learn. It's just a number, a couple of graphs, and it's really so. Even our presentation, we try to keep it simple so it's easy to teach. Some questions in there. Do you find that bull zone versus bear zone indication is the same for both SPY and SPX, or do they diverge? So both of them have a different options landscape, so they're going to be slightly different. The one that has the most prominent spread is one that's hedged back on itself. An example of what that means is if somebody goes out and buys oil futures, and they buy oil futures in general, and somebody's exposed to an oil short. The oil short can hedge the oil short in options, for instance, with futures options by either buying or selling the oil contract or buying and selling 1,000 barrels of oil in the spot market. Because that hedging can escape the commodities, electronic markets, like you go buy oil, off the grid, it's not going to represent itself. The hedging is not going to all be captured internally in that loop. So the trick that we do using the ETFs, because all hedging on QQQ is done internally in pretty much markets you can see. It's going to be either done through futures, through the shares themselves or through dark pools, which eventually comes back to the futures and shares. So SPX, being a cash settled instrument, doesn't loop back on itself because you can't buy shares of SPX. So the map isn't as strong, but because SPY force people to buy shares of SPY, then that liquidity map that we make where the hedge pressures on SPY is actually stronger than the hedge pressure you'll see on SPX or even S&P futures, because SPY options force people to buy SPY shares, if that makes any sense. So anything as like internal hedging like that is really fun to, or very cool to look at. And somebody asked if we looked at Vanna and Charm. We look at all Greeks under the hood. We've had a very sophisticated approach to looking at the Greeks to create these tools, and most all of them are considered. We have a very, I have a very deep math background, being an engineer, and mathematics and mathematical sophistication was always something that I tried to pursue in creating tools. But you guys don't have to understand all those crazy Greeks to learn how to do the rocket scooter stuff. We present it a little more simply than that, and all the cool details are under the hood. Ashton, there's a couple of questions if you want to answer them.
I like this one too from Julia. I would like to see a quantitative analysis of how good the predictive part of the unusual activity is.
I would like to see a quantitative analysis of how good the predictive part of the unusual activity is. Oh, okay. Here's an example. Throw me a random ticker on the fly. Just throw me any random ticker. If it touches one of these hedge pressures, you're going to see a volume spike every single time. That's what I like to see. So one of the cool things is that, just to show the efficacy of it, like somebody type in chat a random ticker, no prep work. We'll do it on the fly.
Yeah, I know they're a little delayed on YouTube, but yeah, everybody.
Oh yeah.
Put a random ticker out there.
Let's do like let me just pick up some JP Morgan. I don't know. As long as it touches, it touches hedge pressure or reacts against it, there's the unusual volume right here. You see right here? And the reaction from it creates a gamma squeeze off of it. It's a very major pivot. You can see right here, both of them are on top of each other. Oh, we have some Tesla.
Yeah, they're all coming.
Oh, yeah. So here, Tesla today.
Let's do those too.
Great example. Tesla off the open broke. Here's an example of what creates a gamma squeeze. Tesla, these are net repulsive forces that push in either direction. This is positive gamma, negative gamma. When you open in positive gamma and you break below it, it creates an exponential collapse, and it predicts a gamma squeeze point. So you see how Tesla just eradicated itself because it flipped from positive negative gamma. That's a big important thing to note. So even breaking through these, there's a rule. We have little light bulbs that tell you when it happens in the index, just to show you those potential catastrophes are about to happen. So there's the interaction here. The volume spike is kind of buried into the first couple of candles, but it's definitely there. Somebody said, I'm just gonna pick some random ones, Amazon, that you guys looked at.
People are like MARA and FSR.
Amazon right here.
Mitch is also talking about an example of how we could trade ES and NQ futures. Mitch, I'm going to get really into that with them for sure. We're going to go back to that.
Yeah. So Amazon right here, you can see that you cluster up right here. And when you have that capitulation and flip positive, do you see those growth in candles? And then when you return to the area to test, there's the volume spike there. It's never not worked for any stock. And what it does, it really identifies, you can't predict direction in the stock market. And that's one of the things we always have to detail. Traditional technical analysis try to use confluence to predict the direction. We actually take the approach that the direction is random, but if I want a long or short, I clearly know where I want to long or short from, because I know the areas where volume will come in. So as a trader looking for high volume pivots, knowing areas of interest before it happens, this was Amazon, somebody put in there. There's going to be high volume that just appears right here. And I know I can either long from it or short against it. But I know that everything else is relatively arbitrary, right? Whenever you're trading, you don't want to take action every single point. But the gamma change, which shows the gamma being the second derivative price change, an essential, or change in order flow, because the delta is changing the fastest. You see the candles get really big off of that blue line when you break it. So you're seeing capitulation in its rawest form. People that are short have to flip long because the assignment flips direction, right? The calls go in the money instead. Somebody said, Mara? Okay. Not all things will touch a hedge pressure, but when they do, it's always this activity. Again, here's a high volume spike as you approach it. Here's this kind of play field as you're pushing through it. So as you see that volume declines, and then you start pressing against it here, and then pressing against it here. So a couple other mechanics are taking place here, like filling the gap and such, but you can see that the high volume squeezes take place up or near that line. A couple more in video. Okay, one more.
Yeah, do this last one. Then we're going to bring Ian in from EdgeClear, and then the last part of the show, we're going to
Mhm.
specifically get into some details. We're going to look at today's S&P and Nasdaq, and talk about maybe how we would look at the futures markets based upon what we're seeing right now.
Yeah. So here you see again, there's that you have monthly options providing positive gamma, and you had another thing where you have weekly options creating this pivot. So when we broke through here and snapped back in here, there's a large candle volume spike. And then there's that interactive support off of the hedge pressures as well. So it's just you're just showing these shifts and just hedging mechanics, right? As options are expiring or getting close to expiration, people are forced to buy or forced to sell based on the exposure they have to the options they've sold. So what these actually are gamma balances of sold options to market makers by the options market makers themselves. They're forced to long or short at a rate of delta to hedge their exposure being assigned the position. So we take that mechanic and utilize that for really rock solid pivots. And how would I use this to trade futures is it's pretty simple, because I'll load up SPY. For instance, my trade today in SPY was long, and I actually cut out right about here because I know there's resistance from there, and I know it's going to be on the podcast, so I didn't want to watch a trade. But knowing that I have high volume in the way of the move I want, I always know I can use this as risk management or getting in and out of trades at certain levels, just to have those pivots where I can look at where I know volume is going to come in from the hedging, but at the same time, I'm going to watch the SPY chart and just click the button in futures. When SPY has a pivot, I'm going to get out in futures. It's a very strong pivot, and the force of the SPX tracking the options and SPY while having its own supply and demand is still tracking the SPX as well. When it's not being pushed away from it, you're going to see that the expiration of these 0-day options in SPY control the futures more than futures control predicting the future of the market. The futures hand gets forced so much. I think Anthony touched on that earlier, was that you're going to see that these options really do push the futures market around very rapidly, especially at the end of the day. Ashton and I have a rule that you don't trade after 2 p.m. Eastern because of that expiration mechanic every day in SPY. Every single day you get a random pivot. If you guys look on your charts at 1400 hours, it's going to be some random pivot, random direction because
I've
of all
seen
that
it,
options
man.
exposure. Yeah.
It's crazy. Like I'm sitting there and I'm watching like the GEX data, and I've been looking at all these different tools. My mind is kind of scrambled by all of it. And you guys have been doing an amazing job explaining a simple way of approaching this. But I'll be watching that data come in, and all of a sudden it's just like boom, that move comes to the futures after that. I mean, it's obvious, right? All of a sudden the futures are just moving in the direction,
Right.
and I haven't really found a great way to determine the direction necessarily yet. But what you guys are showing me is very interesting. What we're going to actually do is we're going to go into we'll just peel it back all the way from the beginning of the day for S&P and NASDAQ, because that's obviously what a lot of people do. But I want to bring Ian in real quick, because what I want to do is I want to talk about our giveaway. I talked about this at the beginning of the show. Everybody remember edgeclear.com/deli, edgeclear.com/deli. Every single month, the last Wednesday of the month, we're live here on Futures Radio Show with EdgeClear, and we give away something. And Ian is here from EdgeClear to talk about this week's winners. And let's talk about who won, Ian, and what they're getting.
Yeah, absolutely. Thanks, Anthony, and thanks to everyone who's listening and attending and registered. So the winners today are getting Bose 700 noise canceling headphones, a pair of those. We did 2, so there's 2 winners and then there's 2 runner-ups. If you are the winner and for whatever reason don't want to claim your lovely prize, then we'll move on to the runners-ups. You'll be notified by EdgeClear. But our 2 winners are Watso Man and Karna 5. And then the runner-up, Tom and Quinton. So hopefully you guys are attending this live and are excited to get your headphones, and you'll be hearing from EdgeClear once we have that all in order and can reach out for your prize.
Awesome. And then maybe, Ian, you touch base a little bit about some of the things that's going on with EdgeClear, and you guys are obviously, we collaborated and talked with Rocket Scooter about coming in, because obviously we're futures based. We don't match trading futures. And I don't know if Ashton said he is trading futures. We'll get to, when we get to him, we'll ask him. I know that he's talking about a lot about trading options, but talk about some of the things that you guys are doing at EdgeClear to, like we said from the beginning, adapt to what we're seeing with this options data.
Yeah, absolutely. So kind of funny, I actually just did a podcast recently as well where I talked a lot about the 0 DTE options. and how you can kind of look at those. And obviously, it's a very hot button thing because of everything that Matt and Ashton have been showing and discussing as far as reading where that volume is, seeing those support resistance levels in the options market. And I've actually been doing a lot lately myself, looking at SPX, of course, ES futures, and just kind of looking at the options movement. Obviously, I would love to be using Rocket Scooter's tool too, but right now I look at a lot of it just in terms of volumes and open interest. And that's where a lot of what we've been working on, a lot of interest we see from the traders we work with is headed as well. So really happy to have people who have developed these awesome tools and be working with them to hopefully provide those to our traders as well. And if it's something that interests you as a trader, check it out. And if not, if you've got your own way of doing things, Anthony, as you know, some people do, totally cool. But I do think there's a lot of really cool information you can pull from this 0DTE and all this GEX information and data.
Yeah, and I have to say, Matt, you and Ashton have done the best job that I have seen so far explaining something on a platform that I think really it's resonating with me a lot, and hopefully it is with a lot of you guys out there in the audience. And what I want to do with Matt and Ashton right now, I'm gonna let you guys take back control again. What I want to do is let's walk it back from the beginning of the day, right? Let's just say, look, I told you I was short. I actually made money being short this morning because I look at the opening 3-minute range. And if something happens, the VWAP gets below that 3-minute low, I still look to get short, and then I just trailed stops all the way up. But then going back to you were long, it goes back to what I said from the beginning. Everything works sometimes in your strategy. Nothing works all the time. This is in the now. This is something that's showing me at the moment to be a better executor of your strategy. This is, direct information from the market. And this is so important because a lot of the strategies that a lot of us have built and a lot of us use are, whether it's a moving average or a Bollinger Band or some sort of indicator that is showing you something and you're looking for the market to directionally be in that way. And then something may change or something happens in the market that all of a sudden triggers these moves. Or there's something that you guys saw coming into the day that tells you something otherwise. And I think this is so important because it's something that we can all use. And it's something that's, if all these traders are looking at it and you're seeing the results that Matt's talking about from these studies that they put out, then it's something we got to keep an eye on. So let's go back to you guys, Matt and Ashton. You guys take it over. Talk to us about what you would see from the beginning of the day today, how you'd execute it to that point, what told you to do X, and then what you see from this point right now going into the afternoon.
I think, and I'll share what I did in my trade, and I think Ashton, if you want to piggyback off of that and analyze, because I'll talk about the monthly map briefly. We have a feature called monthly map that actually can map out that risk at any point in time, not just 0 day. We can actually map out where these bull and bear zones are on every single calendar day where there's options. So you can create a map of what it looks like in the future. And I'll let Ashton kind of cover that because I go into the day knowing what the map looks like from yesterday. And we just see that the bear side has been deteriorating very rapidly. People are just, they can't get out of bear positions fast enough. Bears are trapped at the highs. Call sellers are forced to long. I mean, all these people are stuck even post earnings. I mean, we're getting the effect fundamentally of the layoffs that we've seen lately in the marketplace. Companies have been trimming the fat. So all their bottom lines are going to look good. All earnings are expected to be huge beats. And when that started happening. So, shorts are just wrong on when their shorts should be taking off. So right now people are getting squeezed and we know that. So I come into the market with the fundamental bias of knowing there's a short squeeze. And today was a great example of one of our best indicators we have called resilience. And what this is it's a predictor of the arbitrage of where the SPY is trading relative to the aggregate of all the stocks. So when you add up the market cap of all the stocks filling their gap. So this little white box is where the gap fills. So we gap up or down, and there's usually high volume at the edges of this box. And so the easiest way to explain it is all the stocks gap down and SPY gapped up. There's a difference between the two. SPY is going to eventually snap back into place. So either the stocks are going to jump up or SPY is going to jump down. They're going to meet in the middle somewhere. And the idea is that when that exists is something called arbitrage. There's an opportunity. If something's tracking something else and one goes off course, then you can trade them into each other. And today was that kind of a trade. Resilience is arbitrage that shows exactly why I long. So out the door, there's a rule that states if you open above this box, you're going to push higher. And ultimately it did. So I longed here. And while the market sold off, I had another support for another reason related to that number. I actually longed and I actually doubled down right there, and I X out of the whole thing right there. And that was all done on my live stream today. And we were talking about it. And the idea is that this number showed strength in the S&P despite that selling, which is largely due to Tesla and a couple of smaller stocks. But there was just so much market cap being held from yesterday's Microsoft and Google and Visa earnings that this sell-off did not fool Rocket Scooter. This number being positive all day long states that we're supporting above this dash line. You're above this dash line here. You're going to be above this dash line here. And look, its price is floating off of it right now. The SPY is going to track the stocks under most conditions. And if the stocks are moving higher, there you can have people getting squeezed out of SPY while the stocks aren't moving. And SPY eventually snaps back into place. So I longed and longed again and took that trade because I know when I look at monthly maps, maybe Ashton, I don't know if he's sharing his screen, can show how he does that analysis. But Ashton and I talk every morning. The bear side is just deteriorating the next 2 weeks. I mean, both on all things, stocks, futures, ETFs. I mean, all you see that bears can't get out of their bear positions fast enough, and they're showing their hand very easily. I don't know if Ashton, you have your screen up and show a monthly map.
Can I just interject real quick? I just want to ask one quick thing. So when you look at the bottom here, you're saying that the white line was above the orange line down at the bottom.
Let me zoom in so you can see a little better, Anthony.
Yeah, just explain, because what I is, if I, let's just say, I'm a Rocket Scooter user tomorrow, I get this set up and I look, the market's going lower, and that white line is what, that orange line is what, and if that white line is above it or below it.
Oh, cool. Okay, so let me give you, so this is 0 where this dash line is, and the dash line is where this dash line is. And at 100 is going to be the top of the box, and minus 100 is going to be the bottom of the box. You still with me? Okay.
Yes.
So it's how the white line is reflecting across 0. SPY is the aggregate of the stocks are holding their halfway point. And we call it a half gap. So if a stock gaps up or down, it's the halfway point between the middle. We know that the open and close imbalance creates high volume. That's that high volume, the open and the close of the day. So the middle is always a really good pivot. You can see there, you can see there, you can see there. And so what this does is this is just a tiebreaker at the dash line. If this is above 0, then the pressure is this way. If SPY trades below halfway point, but this is above 0, there's an opportunity. So I long the SPY so that it can jump back to the other side of that dash line because this is above 0 here. It's a gap fill predictor. So if SPY is literally trading down below yesterday's close, we gapped up and we filled the gap and we're trading lower, but the stocks aren't doing the same thing. You can say, oh, okay, SPY's got to snap back into place. So either the stocks need to trade down or SPY needs to trade up. And this is what the stocks are doing. They're clearly not trading down. They're holding their gap, and SPY, once it essentially unwrap that selling pressure, SPY immediately just beeline back to where it needed to be. So it's pure arbitrage of how the SPY is lagging what the stocks are doing. So it's just how this white line is above the dashed. And the yellow is another mechanic which kind of predicts a similar aggregate of what happens when you're near its monthly hedge pressure. Now, we're really far away right now. This is that high volume pivot for monthly expiring options. It tends to be closer to price, closer to expiration. This is just gamma hedging positive, or so gamma is positive for the monthly side. And so when SPY is interacting with its orange line, this is the tiebreaker when you're there as well. So you can see the majority of stocks are also gamma positive in the S&P and in the NASDAQ. So it's showing you that with everything being left to its own, even over the course of this month, which goes all the way to the third Friday, even stocks as a net sum of market cap are still being hedged positive. That's that short squeeze we're talking about. So the yellow line being also above 0 shows that the stocks themselves are maintaining that positive gamma at least a month out. The short squeeze could last for an entire month. So, and Ashton, if you want to do that.
That was massively helpful there. Hopefully everybody out there, once again, continue to put your questions in. We're running a little short on time, but this is just fantastic. And we'll go longer if we have to, as long as these guys have time, because I can tell you what, they're doing a great job at explaining this, and I love it. So maybe we pull Ashton in a little bit. Ashton, you're using this stuff all the time. Now, I did mention that Matt, was trading futures. I said maybe you are, but are you just selling options? Are you just buying options? How are you choosing what product to trade? For example, like today, Matt used the futures markets in his trade, right, Matt? Is that what you used?
Yeah. I use this for I look at the SPY to trade S&P. I look at NASDAQ futures, and actually Ashton messaged me the other day. I about brought him over to the dark side because he wants to start learning futures too.
Oh, buddy.
Yeah.
I am not making any guarantees on that. like you know what? I gotta all my friends and all my buddies are just trading futures, and I feel so left out, man.
So talk to us about, so you're using the options market. And so I think it's important even for the futures traders to know, even though obviously this is futures radio show and we're mostly based there, but I want to get Ashton's perspective of, you see what Matt saw this morning. What are you doing? What are you choosing to do in the options market when you see that?
So I'm doing one of two things. Either one, if I see a very, very clean setup right out of the gate, let's say I'm looking for a bullish movement. Since these are 0-day options, occasionally I'll do maybe 1 day or 2 day out, just depending on the market. But let's just say, for the sake of this argument, that I'm just trading a 0-day option. The only way I will be a net buyer, so I'm just buying a call or buying a put, is if I see a clean setup in Rocket Scooter platform out of the gate. So that's the only way I do it. Otherwise, if you wait too far, let's say you wait an hour into the market, those contracts they're just going to keep depreciating faster and faster and faster and faster. And that means that you need an even cleaner setup, and you have to be right now, or else those contracts will just eat you alive. So that's number one, what I'm doing. If I find a setup that I like, that I have to sit back and wait. So what Matt and I will do is we'll say, okay, price is looking that it might pull back down to hedge pressure, or it might go up to hedge pressure, whatever the case is. But we got to sit back and wait for that to happen. If that's the case, then I'll look to sell options for premium. So I'll do a call credit spread or a put credit spread. So that way, the theta decay, once I get in it, is actually working in my favor. So that's normally whenever I'm trading 0-day options, that's one of two ways on how I handle that. I'm predominantly my bread and butter is swing trading, though, if I'm being honest, and I'll facilitate some cash flow with some day trades here and there. But we just rolled out, Matt alluded to this a little bit ago, and this is beneficial to both swing traders and day traders, is our monthly map tool. It's we call it our monthly map, but we can also do a weekly map. And what we mean by this, guys, is if you're looking to just trade specifically futures or 0-day options, we can look to see and map out where the bulls and the bears are located each day. So today's Wednesday, we can map out to see where they're located for today, tomorrow, and Friday. And we can create some kind of game plan or tentative game plan ahead of time based on these levels. So Matt, if you stop sharing your screen, I can share mine. And you're muted.
Sorry, let me stop sharing my screen. I didn't know that you couldn't. Let me go to.
I can remove yours. You don't need to. Just, you can pull yours up, Ashton, and I'll add it in there. Oh, there he is.
And just before Ashton gets started, sorry to interrupt, Anthony. Maybe I'll do, like, later. I'll post a link on my Twitter. I'll do maybe an open Zoom call so people just want a little more information. There's a lot of questions, and I don't know if I'll have time.
Yeah, there is. And I think it's difficult for some of these are just directly to you guys, not necessarily to the conversation. We're talking about data, and then, ways to do zero, or ways to learn just about 0 DT. I mean, a lot of people coming in directly in the middle or the end of the show. It's not easy to totally catch up where everything is. And obviously this is recorded and available on audio later. And these guys are going to take some snapshots, and I'm going to have a chart deck for everybody to download. And so you guys are going to be able to go to anthonycrudelli.com and download the chart deck, and we'll point out some of the things that they were looking at. So you have something in your hand that you can see, if this makes sense to you. And so, yeah, I mean, Matt, definitely you can put something on Twitter, and you guys know that these guys they're good guys, and they'll answer any of your questions following the program if we don't get to them. And so we've got now, Ashton, your screen. Let's get back to you, buddy.
Okay, so you guys will see my screen here, and you can see my bull and bear zones are different colors. I'm a colors guy. I like my bear zones to be red and my bull zones to be green. So I modify my charts accordingly. But this is what Matt was showing you guys. Okay, the same exact screen. We're looking at a daily chart of the SPY. Okay, but what I want to show you, I want to direct your attention to this monthly map feature that we have over here. Now, what you'll see a lot of colors here, but all these colors have very, very distinct meaning. These blue lines right here, I just did this for the sake of making this a little bit easier to see. Or this is today's date. This blue line is tomorrow's date, and the next blue line here, I'll just put another one here, and that's Friday's date. So we're looking at 3 days of worth of levels based on where people are positioned. Okay, so for tomorrow, we can see here See how close this red box is and this green box is right here? Well, this is telling us that volatility is going to be pretty low heading into tomorrow, which is really curious and really shocking, because we're in the thick of things with earnings season right now. We have Roku reporting today. We have Meta reporting today. We have Amazon reporting tomorrow. So you'd think volatility would be all over the place. If these were wider apart, this would indicate that there's going to be high volatility heading into tomorrow. So we have a sense of what volatility is going to look like. Check. Okay. We also know exactly where these institutions are positioned, either bearish or bullish. So right now, price is right here at SPY 406.87. So right now we are in a bear zone heading into tomorrow. So you can start to see how beneficial these monthly maps or these weekly maps can be, because now you can create a tentative game plan heading in tomorrow. And now once tomorrow gets here, we pull up our Rocket Scooter platform for that particular day, knowing in the back of our mind that, hey, we have bearish sentiment, and you can create a trading plan around that. Same thing heading into Friday, but Friday looks a little bit different. These zones are much further apart. So, there's that saying, don't lose your behind on a Friday. Well, this applies to this Friday for sure, because the volatility is going to be probably all over the place, because there's a lot of indecision and a lot of quote unquote disagreements between bears and bulls on Friday, right? So this tells me that, hey, if I want to trade 0 day tomorrow, cool, I have a tentative game plan. But Friday, that might be a little bit tougher. There might be a lot of chop, or there might be some violent swings intraday, which could definitely be a good instance to trade on 0 day or even futures. But just be ready to possibly be shaken out, and just keep that in the back of your mind. But I want to go back to I'll just use Amazon as an example.
Actually, before you change that, there's one thing I want to say on that. Can you show the chart really quick? What Ashton was highlighting, where that bear zone is, notice that it's a bear zone tomorrow, but by Monday it's a bull zone. You can see that.
Explain that a little better, because I'm not sure I totally understand from seeing the chart.
Okay.
Explain to me how you know it's a bull or bear zone.
So what his colors, green represents a bull zone. So what we call a bull zone is an area where our algorithm has detected like a market maker option. The way that it works is that if you go buy 1 million shares of SPY, there's not going to be 1 million shares on the ask, right? There's going to be a dealer that's on the other side of your trade, and they're going to hedge it some way. So if they hedge by, they short the million to you, and then they go out there and they buy, the 10,000 calls, they go with that. When we find those 10,000 calls and we have that whole chain of you to market maker, we know that you're long there at 1 million shares. That's because we found their calls there at 10,000. So the idea is that bull zones are going to be where bulls of the underlying are with an inactive seller or a dealer seller. And so the idea is that it splits the market to illiquid points where there's bulls with no bears or bears with no bulls. So the green is where there are bulls with no bears positioned to expire on each one of those days. So, and bears are the red on his side, where there are bears set to expire each one of those days. A clear thing to take note of is that over the next 3 days, that green box goes lower and lower and lower. It means bulls are willing to be long at a lower price over the next 3 days. And the bear side, the red, goes lower and lower and lower, which means bears need it to go lower to get into a short, or the other way around, they're getting out of their shorts as early as the next 2 days. So what you see is like a bearish sentiment tomorrow immediately becomes not bearish for the rest of the month. Those red boxes just deteriorate. There's not going to be any active bears because those puts disappear. If you're short, an example is if you short the market and the dealer longed to you and bought puts, those puts are only there as long as you're short the market. If you exit your trade against the dealer and they haven't found the other side of the trade, they're going to close out their trade too. So as you see, those puts are going to expire in the next 2 or 3 days. And then after that, when we say the bear side's deteriorating, it's because those red boxes are moving lower and lower and lower, and those green boxes are moving lower. Even out past the Fed meeting, middle of May, you can see there's green support all the way down at 380 on SPY. The bull side is strengthening over the next month, and the bear side is weakening. So you can see it by where the distance is, or the low part of the green box or the tall part of the high part of the red box. And when Ashton talked about volatility, it's the distance between the boxes. So if the distance is wide, that particular day is going to be volatile. So you can look all the way out in June, and you can see that the SPY looks like it's going to have effective 25 points of or 250 points of potential volatility over the course of that week. So the market gets very volatile towards the middle of May and middle of June, right? And then, we have QT kicking in, and we have Fed possibly, not raising rates any further. So the market's getting a little crazy, and you can see that this past earnings season, which is where we are looking next couple of weeks, bears are just getting squeezed out, and bulls are kind of holding the fort. Those green boxes are relatively flat. It means bulls are staying put, and bears are walking away. So the way that we look at monthly map is to forecast when that sentiment changes. And what Ashton was showing you is that not only do we have volatility on Friday, we have a clear shift from where his mouse just was at 400. 400 becomes very strongly bullish as early as Monday. And that's mapped out today with the current landscape. And every morning we remap it to show what the current landscape looks like as the options change every day.
I love that because it's confirmation. You're building on it, right? You're taking the homework from the longer term. You come into the intraday. If you see them coinciding with what the theme is, it could be a very powerful day. And then also goes back to choosing what instrument, how much size you're going to use, all sorts of different things. You're not just coming in and just solely counting on what you're seeing for the day, and just you need more information to adjust position sizing and all of that. I love that. That's very important. I'm so glad you guys showed us that.
Ashton, can you change your axis a little bit to capture the Fed day, or can you just make it smaller? Do you see how, like, where the 11 is at the bottom of his screen? You see how the market gets unusually wide around that time? That's Fed week. Like, you can see where there's unusual volatility, and you can always look at this map and go, what's going on that week? Something weird must be happening. And you go, oh, well, the Fed decision's right in there. Well, that makes a lot of sense. So it keeps you not, even if you don't actively do all the components of what traders do, read the news and read all the news reports, this will alert you that you need to go Google something. Something's going on that week, and you don't want to be caught off guard, as a new trader.
So one way I use this as a swing trader, and this is really this clean cut, and this is such an amazing tool. So we see this week that volatility it's starting to expand, but it's not nearly as expanded as we go out to May 12th, which is 2 weeks away. So this is telling me as an options trader, well, if I wanted to sell for premium today and, for a 3 or 4 week swing trade, well, that wouldn't make much sense for me to do that right now because volatility has not yet expanded. So if I'm a net seller, if I'm selling an iron condor or credit spread or cover calls, whatever the case is, wouldn't it make sense for me to wait? And that's exactly what I've been doing. I've been telling our community, it's like, hey, I'm getting antsy here, but I'm going to wait because volatility is going to be expanding over the next 2 weeks. And when it expands, that's when I'll make my move. But as it begins to expand, well, then it makes sense to be a net buyer in this case, because if volatility is expanding, well, that's going to juice up your premiums a little bit more. It's going to help you as a net buyer. So you're buying calls or puts or debit spreads or whatever. So, but this is telling me right here, this is telling me right here that today, or going into tomorrow, that we're going to be in a bear zone, but the volatility is going to be low. Well, what's happening today? Well, Meta's reporting earnings, and then Amazon's reporting tomorrow. So, to me, as we get back into Friday, we're immediately back in a bull zone. So this is telling me somebody knows something, and this immediate shift back to bullish is probably going to be some kind of earnings play. So we can do this for individual stocks too. So if I just look at Amazon as an example, since they report tomorrow, we can see this here. So you can see that the volatility is much smaller than that of next week's expiration, because obviously we can't do these on 0-day options because individual stocks don't have 0-day options, but we can do it on a weekly basis. So this is telling me that earnings for Amazon might actually be pretty good because we're in a bull zone, volatility is low, so earnings may be flat to positive. And then we can do the same thing for Meta. Meta is a little bit of a different story. So right now, price is trying to break into this illiquidity pocket. So this is telling me, and volatility is going to be really, really low. So this is telling me that earnings for Meta might be flat to down. I'm not a fan myself of trading earnings directly, just because there's a lot of moving parts that go into earnings. But this is one way to possibly do that if you're interested in doing that. So
yeah, expand on what you just said. I mean, he's detailing that, saying that earnings aren't going to be that violent and they're going to be flat to down. And that what we had yesterday. The map was the same way. Map wasn't volatile. There was no bull or bear distinction. And what did we have? Microsoft and Google came through, dipped and came right back. And the market sold off all day, rallied right back to middle, reverted to mean, and sat still. It's showing you that earnings are already priced in. There's no expectations of deviation of what people believe. It's that everybody knows earnings are going to be great. They're going to be a beat, and it's already priced in. So like Rockets here is revealing that to you. Yesterday was the same thing. We had no volatility on those two. Market been trading down all day, and we're just sitting there. By the end of the day, they're probably going to rally back up and jump to the middle. And market did just that. There's no reported volatility. That pre-earnings selling were the people that were getting squeezed or walking away beforehand, and we weren't really scared of it. We were like, market's probably going to not be volatile. It's not going to shoot down. It's not going to shoot up. The monthly map is showing you a mild earnings season, and we've had that, right? The market's not selling off. It's not rallying. It's just sitting still. And the Rockets here is showing you now Meta and the other one, Amazon, looks to be exactly the same. We've probably got another flat couple days.
Yep, and I put on a trade. I'm a big fan of trading the Russell index, the RUT, and I put on a credit spread. And going back to what I said a little bit ago, well, it doesn't really make sense to sell for premium right now. However, that was referring to holding a position into next week and the week after because volatility is going to be expanding. But for this week, volatility is still relatively high, depending on the instrument that you trade, because of earnings and earnings alone. So I put on a credit spread on the Russell yesterday. It's already at 90% of max profit, and people were asking me like, why would you put on a credit spread? And it's because of this reason right here. I'm looking at these earnings, and I'm looking at Google was telling us, Microsoft was telling us this, and it was telling us that it's either going to be up to flat. So, and Meta and Amazon are telling us the exact same thing. So I was just like, I'm going to take advantage of these juiced up premiums during earnings week. I'll put an expiration at the end of this week before it starts to expand, and then get out. And that was all based on these monthly maps here.
And
Great
really,
tool. It's actually one of the things we just released a couple of weeks ago. So it's cool to have that. What's up, Anthony?
No, I was just going to say, and really this helps futures traders understand the environment. Like earnings season for me as a futures trader is always one of the most difficult ones because of these push and pull type days. It's Amazon, it's Tesla, it's Apple, and you're like, okay, do I just watch that? I mean, it's always tricky because you get a lot of push and pull moves, but this can help really understand the landscape of what potentially could happen, and it can help you understand why the market is acting the way it is intraday. Guys, we hit the full time. You guys were great. You guys answered all these questions today. It was awesome. I know that you guys will carry on and answer these questions going forward. Matt and Ashton, just tell everybody really quick where they can go and learn more about you guys and Rocket Scooter. And of course, I will also have those links down below in the YouTube description. If you're listening later in iTunes or wherever you listen to your podcasts, they'll also be in those descriptions. But you guys go ahead and tell everybody right now.
You get first, Ashton?
Where to find you guys on Twitter and the website.
So I'm on Twitter it's actually Ashton Noland on Twitter, but I'm more of the Instagram guy. So that's really? where I started cutting my teeth on social media. So that's my hub on social media is on Instagram, but I do a lot on Twitter. I have not gotten into YouTube as much, but I plan to do that in the near future. But I'm in TikTok. I'm on TikTok as well. So
nice, Matt.
I'm on YouTube every day. I live stream trading. I'm actually doing a trading challenge right now, which is kind of fun. And I show all the trades and entries and exits I make, which is fun. And you guys are all welcome to come, check it out every day. It's free. I'm on Twitter, Rocket Scooter AI, and Traders Paradise. You guys might know me from that. Feel free to follow both of them. And we have a Discord that comes part of the subscription with the platform. And of course, you guys are all welcome to come check it out. I'm going to do a Zoom call today. Actually, I'll post a link up. And if you answer all the ton of questions, I'm so happy to see all these questions. There's a lot of hungry traders out there that want to learn a little more advanced topics. So I'll do an open Zoom call today, maybe just a Q&A session for an hour so you guys can come over and check it out, and I'll feel free to answer all further questions you have. So Traders Paradise, one word, and feel free to follow me there, and I'll give you all the relative links after that. But we appreciate having you guys. Oh, and Anthony, when Ashton was showing you that non-volatile week, that's why I didn't have any fear of the market selling. We added his monthly map to this resilience tool I had. The market sold, I bought more. I feel it would snap back up to the flat spot, and that monthly map shows there's no volatility going to earnings, right? So it's that the landscape is exactly what you said. That environment is very important. So
Yeah, because if you're stepping in and you see a market that, like for someone like me, when I saw them break this morning, I'm like, well, it could be a trend down day. And then if you look at your stuff, it would help me execute and say, well, look at, you've got number one, volatility is probably not going to be too high. You definitely want to be covering a little bit quicker, tighter stops if you're short, and also potentially looking for a reversal if you do get an indication. And so you guys just did a fantastic job of explaining how to use this stuff. I can't say enough about you guys. You guys were just great. And I appreciate both your time and everybody that tuned in today. Thank you guys so much. I'm hitting that Vegas wall, boys. It's like midday and I'm kind of like, yeah, you know what? I need to go grab something to eat, watch these markets on the close. But I got to tell you what, you guys just did such an awesome job today, like I said. And everybody definitely go out and follow you guys. And everybody that tuned in, once again, thank you so much. And I will see you guys next week. Peace, everybody. See ya.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudelli.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudelli.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudelli Productions.